Fewer issues in recent years have been as consequential for the nation's food system as the global trade war, which has upended the U.S. agricultural sector, especially the soybean industry. China's pivot away from American farmers last year was not just a temporary financial hit, but could become a generational shift. Hello, I'm Ben Felder, Editor-in-Chief at Investigate Midwest, and I want to welcome you to this live panel discussion in which we plan to take a deeper look at those changes. Our panel today, titled Ag Tariffs and Trade War, What China's Investment Means for U.S. Farmers, is being hosted by Investigate Midwest, the Mississippi River Basin Ag and Water Desk, and the Arkansas Times. We have five great panelists that I will introduce in a moment, but first, a few housekeeping items. This is a live panel, but is being recorded and will be posted online and on YouTube, so if you have to exit early, you can still watch the entire discussion at a later date. I will be asking questions, but we are also inviting the audience to participate. If you have a question, please add them to the chat. I'll be going through some of those questions in the second half of our discussion. Lauren Cross, the Assistant Editor and Audience Engagement Manager at Investigate Midwest, will be collecting those questions, which makes this a good opportunity for me to recognize Lauren, who has been the architect behind this panel and has been working for months to plan and promote this discussion. So thank you, Lauren. Now I'd like to introduce our panelists. First, we have April Jimenez, who is a fourth-generation soybean and corn farmer in north-central Iowa with decades of firsthand experience in global trade and market volatility. She's also a frequent speaker on how trade policy affects U.S. farmers. Phillip Powell is an agriculture and environment reporter at the Arkansas Times and the Mississippi River Basin Ag and Water Desk, where he covers soybeans, tariffs, and trade policy. His work focuses on how global trade decisions impact Arkansas farmers and rural economies. Mónica Cordero is a data and investigative journalist at Investigate Midwest and the Mississippi River Basin Ag and Water Desk, covering agricultural trade, soybeans, and global supply chains. Her reporting examines how China's investments abroad affect U.S. farmers and rural communities. Dr. Joanna Colucci is an agricultural economist at Purdue University, specializing in global crop markets, farm management, and international agriculture. She was born and raised in Brazil, and she closely tracks South American market trends. And finally, Dr. Jared Phillips is a farmer, writer, historian, and at the University of Arkansas with deep roots in the Ozarks. His work explores organic farming, rural history, and the cultural impacts of agriculture. Welcome to our panelists, and thank you so much for your time today. April, I want to get started with you. When it comes to the history of the U.S.'s relationship with China and soybean exports specifically, you've played a central role. Can you give us kind of a brief overview of what your work has looked like?
Sure, be glad to. First of all, thanks for having me. I first went to China with Iowa Farm Bureau Federation as like a market study tour. And then since then, I have been on the Iowa Soybean Board and the United Soybean Board. So gotten to travel to China several, like 8 or 9 times. And what we do is, people love to meet the farmer. And then I talk about how I raise my crops, what I do on my farm, things like that with Iowa soybean farmers, also farmers from around the U.S. and experts too. Like I was just talking with Jared about how one of his colleagues, Marty Matlock, went with me to China. We talked sustainability and what we're doing in the U.S. So, the properties of the soybeans and things like that. But everyone loves to meet a farmer. And then I also host them back here on my farm. So I've had several of the top buyers of soybeans in China and government officials drive my combine. And if you want to see a person light up, let them sit behind that combine and actually drive it or push the auto steer button, but then they get more of a grasp of what we're doing here. So that's kind of what I do, schmoozing, I guess you would say, but just letting them know how the crops are grown that they're going to be buying.
Yeah, and China's been such an important customer for American soybeans, and that
Yeah.
relationship took a lot of hard work that you played a central role in. I, we're talking mostly about soybeans. How are U.S. soybeans used in China? I mean, what is the importance of China as a buyer?
Right, that's a great question because they're used for food and feed, but mostly for their swine herd. They import mostly whole beans and then they crush it because they want the oil and the meal. Now, when you crush a soybean, about 80% is meal and 20% is oil. So the oil goes for the cooking use and the soybean meal goes to feed the hogs. But China's really evolving in their ag tech and how they're raising hogs. So, we really need to look at relying less on them because they're getting a lot better at what they're doing. So, but that's mainly how the soybeans are used in China.
Yeah, thank you. So,
You bet.
President Trump's tariff hikes prompted China to reduce American exports, including soybeans. In fact, China stopped buying soybeans altogether last year until a new deal was announced in October. Philip, can you tell us about what brought the U.S. and China to the table and what that deal was that was made late last year?
Yeah, absolutely. And just thank you all for having me. I have a real privilege to be a journalist here in Arkansas and get to talk to farmers and try to, wed the experience that I'm hearing on the ground with the kind of the policy and the history and the legal. And I wrote a story back in October. And if you would ask me, on the whole topic of China and the United States and the trade relations and how that's impacting farmers here on the ground, and if you would have asked me a year ago if I'd be writing so much about China, I would not have believed you. And yet this great power struggle that we seem to be in, the United States and China, has such a deep impact on so many farmers and across the industry, but especially who are doing row crop farming in soybeans and corn. But to actually answer your question, Ben, um, you know, I think really what the reporting tells us, what brought the United States and China back to the negotiating table was actually the critical minerals issue, because it seemed that the United States really could not go without the many rare earth minerals and critical minerals like lithium and others that China has a stranglehold on as far as the supply chains. And so that brings us back to the table, and President Trump negotiates a new deal with China to have us over the next 3 years. China will buy something like 25 million tons, I want to say. I could be a little bit off on the firm figure. It's been a second since I looked at all these. I have actually Dr. Colossi's work at Farm Doc Daily pulled up
Okay.
here.
Mhm.
But point being is that those soybean totals that they're going to be importing are is not very much. It's about the same that they were importing over the last few years. And for anyone who talks to a soybean farmer in Arkansas, up in Iowa, anywhere else around the Mississippi River Basin or around the country would know that soybean farmers have been struggling at these levels of exports and at these prices that they've been getting. So whether the deal is going and whether that deal is actually going to remain and keep soybean prices where they are is to be seen, but that's kind of where we're at.
Yeah, thanks, Philip. Well, you talk about the impact on farmers real quick. I want to go back to you, April. What is the outlook for this year with this new deal for
Well,
soybeans?
first of all, there's no deal. It's just an agreement. That was bugging me. So, there's an agreement. Oh, yeah, we'll do this. And you're absolutely right. It's because of the minerals that brought them back. And also they need our soybeans. At the end of the day, Brazil can't serve, South America can't service all their needs. But what's it mean for us? It gives us hope, but yet we know we need to look inward rather than outward. We need to boost those domestic markets. And, what I would love to see is more meat going out. We feed those animals domestically, and then export the meats to places. So, with China's isn't growing in population, it's shrinking, and we know that. So we know we have relied on them for too many years. So looking forward, the problem is our input prices are so high, and the prices of the commodity, the inflation hasn't kept up with it. So yeah, we're not making a whole lot of money out here.
Yeah, yeah. Monica, China's decision to buy more soybeans from Latin America, especially Brazil, which dramatically increased this past year, it wasn't a hasty one. I mean, you've written recently about how China has been investing in Latin America for several years. Can you talk about what those investments might mean, and why we aren't likely to see a full return to the U.S. market anytime soon?
Well, thank you for first, I would like to thank Ben, Lauren, and the team for organizing this panel. I think that is so important for farmers. Um, come back to the story that we published in last year. Um, I have found in my reporting that China shift toward Latin America, especially Brazil, is structural, not temporarily. What we're
Mhm.
seeing today is the result of a long-term strategy to secure and diversify its food supply. Officially, China's presence in the region is tied to the strategy called Belt and Road Initiative, launched in 2013 for the President Xi Jinping to expand trade connectivity and economic influence across more than 150 countries. But when we think about Latin America, this relationship started. I would like to give this context that the relationship with Latin America actually began earlier. In the early 2000s, was already built diplomatic and commercial ties through what analysts call back then stadium diplomacy. It means that China financed major infrastructure project to strengthen relationships across the region. It was called like a gift to Latin America. The Belt and Road phase takes that strategy much further by addressing a key problem that our Latin American countries have: logistics, infrastructure. Because we have the land, we have the technology to harvest and do the work in the agriculture field. But the problem of Latin America is infrastructure. Through my reporting, I found that China has investment in at least 23 ports across Latin America, part of a broader effort that experts describe as an attempt to strengthen and, in some cases, help control the commercialization chain from farm to chip. This matters because logistics costs are a major competitive factor in agriculture. In a conversation with Fernando Bastiani of ISALC is a group of researchers and extension in agricultural logistics at the University of Sao Paulo. He told me that those costs can account for 20 to 25% of the final soybean price in Brazil. Then it gave us a perspective how important is infrastructure for agriculture. By investing in ports and because they invested in ports, railroad, and shipment infrastructure, China is helping South America move soybean and other agriculture products more efficiently and at lower cost. Then in our story, we digging into the port of Santos, that is one of the main ports of Brazil, to ship in soybean to China. And the other port that I see in my reporting, I see Port of Santos of the present. And there's other port of Chancay in Peru, that I think the port of Chancay of the future, because this port is direct connection with China. According to the expert, the transportation of agriculture, of the transportation in general of good from South America to China will be reduced between 10 and 23 days.
Yeah.
Aren't they
Then
building a rail line into there?
exactly.
Okay.
Exactly. There is a project that it's still a project.
Oh,
But
okay.
it's interesting that this project was like freeze. And if my memory don't fail me, 1 year ago, they started the conversations again, Brazil and China,
Hmm.
because they want to connect Brazil and Peru in a railroad.
Hmm.
Then
Yep.
they could use the port of Chancay, like, the gate to the door to go to China.
Hmm.
Then, as we see, this is not a temporary investment. China has already seen in Latin America, and we're only talking about Latin America because this is a worldwide project or strategy. Then we can see how China for years has been invested and matured the relationship, especially with South America.
Yeah, yeah, it was such an interesting story that you did, just taking a look at that incredible amount of investment and infrastructure. Like you said, again, this is not just a quick pivot. This is an investment for the long haul. And your story, Monica and Philip, your reporting. Maybe I think Lauren has some plans to maybe put the links to some of those stories in the chat. Speaking of the chat, if you've joined us a little bit late, we're asking questions of our panelists, but we'll be taking some questions from the audience here a little bit later. So if you have any questions, feel free to stick those in the chat. Lauren will be going through those. Um, Dr. Colucci, following the new U.S.-China agreement, not deal, but agreement in October, you wrote that Brazil could see its soybean exports to China decline, but you also reported that farmers across Brazil have begun planting, for the 25-26 crop that began that in October, with record acreage expected to reach 121 million acres, up 3.5% from last year. There's also been an increase in growing in Argentina. Can you talk about the global soybean market and what it could look like as these Latin American countries increase their own production? I mean, what could be the long-term impact on the United States?
Hi, everyone. First, thank you all for having me today. It's great to be here discussing this topic. It's a topic with a lot of information. To answer your question, Ben, I will start with a few numbers from last year. Brazil set a new record for soybean exports, shipping nearly 110 million metric tons. Of that total, about 87 million metric tons, roughly 80%, went to China, which is also a record. This in 2025. This result was partially due to the tariffs, of course, imposed by the United States. Then Brazil gained even more market share in China during the trade tensions. That stronger demand also led Brazilian farmers to continue expanding soybean acreage. Is not something new, but I would say that farmers received an extra incentive to do that in the current crop season. Argentina took advantage as well, recording higher soybean shipments to China in 2025. So now answering your question more directly, what can we expect for 2026? In general, we may see a slowdown in Brazilian shipments to China, largely because U.S. soybean export to China are expected to return to more normal levels. Have you mentioned about that? If you get, I have the numbers here in the last decade around the amount of the soybeans that United States export to China. So in 2025, due to the tariffs, the US exported just over half of its 5-year average to China. So there is the expectation that with this deal, United States could recover a little bit the market. So maybe we cannot expect a new record in Brazil. At the same time, Brazil is harvesting another record crop right now, expected to exceed 180 million metric tons. That's a record historical, which increases global soybean supply. So we are already seeing the impact of this record. Soybean prices in Brazil have declined, and farmer margins are at their lowest level in about 15 years. So the financial stress that we have seen which U.S. farmers have been experienced over the past 2 seasons here in U.S., is now beginning more emerge in Brazil as well. There are a lot of cases of bankruptcies in Brazil, also because of the high cost productions and the low price of soybeans. So I would say that in the short term, this could lead to a slower expansion of soybean acreage in Brazil. If that happens, global supply growth could slow, which may help support international soybean prices in the near future. Of course, when you go back, we have seen Brazil increasing the acreage every year. I'm not saying that Brazil will not continue increase, maybe will continue, but in a slow down. Instead of 5 or 6% a year, this last year was 3%, maybe we will see 1 or 2%. So, and that will impact the international supply of soybeans.
No, thank you. I mean, we're obviously focused on the trade war, and that's been a major economic hit to farmers, but it's not the only economic challenge. Dr. Phillips, you've written about the incredibly tough economic conditions that are squeezing farmers, partly due to the trade war, but also monopolization in the ag industry. Can you give us an overview of those forces and why we are kind of what feels like kind of a perfect storm in that regard?
Yeah, well, thanks everybody for inviting me to be a part of this. I appreciate that. And to answer your question, Ben, you really just need to come take my history of ag class. It's going to take all semester to get it all lined out. I mean, the short story, it would really be that our current crisis really begins at the end of the 1970s, and we've never really transcended the crisis. So when trade deals were renegotiated or stopped with the Carter administration and the then Soviet Union, and then when different policies came out of the Reagan White House in the 80s, we kind of created a permanent crisis, if you will, that we've band-aided over with an imperfect patchwork of subsidies and extension programs and stuff. And all of these things are very well-meaning, but it's kind of accidentally meant that the stated goal of the 70s Ag Secretary Earl Butz to get bigger, get out, to prioritize a certain kind of farmer doing a certain kind of thing became reality. And on the one hand, that's really good because the United States has been able to capitalize on and control in some aspects the hemispheric market and the global kind of like shift on how we want to think about agricultural technology and appropriate use of technology and chemicals and seed genetics and all this kind of stuff. It's been really good for us in some ways, but it's meant that we've created directly and indirectly we've created kind of like the bumper rails in a bowling alley right against us. We don't have any flexibility. We don't have anywhere to move. Whether you're a big farmer working on, in a slightly diversified mono system like April is, or you're a mid-sized livestock farmer, like some of my neighbors are, there's not a lot of wiggle room anymore, because as we responded and tried to survive this extended farm crisis, what one historian's called a chronic crisis, it's meant that we've kind of had to cut out flexibility and cut out diversification options that would have, I know there's somebody that asked the question about that would have potentially helped us out, but there was no support for it because the only way that it seemed like we could make the system continue to work was to prioritize a particular vision of agriculture. There's nothing nefarious about it. This was just the way that we were trying to respond to the immediate fire.
Yeah. Some may be thinking, okay, tough economic times for farmers, but, hasn't the Trump administration announced bailout payments? You wrote in December, quote, farmers say that the ad hoc payments don't ever hit their pockets. The money they get from the government is immediately paid to suppliers, lenders, or credit systems. Can you explain why that is? Talk a little bit about that.
Yeah, I see April really just nodding her head. I mean, correct me if I'm wrong, April, but I mean, it was a very small bailout package that hit a small portion of the agricultural sector, and because of the input costs, machinery costs, land costs, deferred payments that we had to do for other things, it meant that we became a pass-through account, and I'm saying we as a sort of a generic farm world. But it meant that the aid
I
didn't
think it's
really,
like over 75%. When I was
yeah.
at a conference with Joanna, I used that same thing. But yeah, it goes if the input providers know I'm going to get money, do you think they're going to lower their costs because they want to be nice to me? No, they want a part of it. So
Yeah.
sorry. Yeah.
No, you're totally right. And the reality is, as we rely on more, as we have a declining farm population, and so we're relying more and more on technological solutions, those solutions are expensive. And so,
Mhm.
a lot like, so whether it's new seed technology or a new combine, like those that, so that just the costs to farm have grown exponentially. But the price that farmers are getting, no matter how supportive the system in, have not nowhere kept up with what that would be just to break even, right? And so when you get a very modest response from the White House, no matter the party, this is not a
Right.
one
I
party or another
agree.
situation.
Yep.
Both parties are at fault here. Then what that means is that farmers are just they're unable to economically thrive, right? And kind of through no fault of their own. You can work yourself to death, do everything right, and still come up in the red year after year after year. And I said this kind of starts in the 1970s. The reality is this is over a century in the making. It heightens after the 70s.
Yeah. Philip, I'm curious what you're hearing and seeing from farmers that you're talking with and you're reporting on the ground. I mean, during this kind of, I know you've been focused a lot on the impact of the trade war, but like what are you seeing in Arkansas in your coverage as that, as I referred to it as kind of this perfect storm, this perfect economic storm of challenges that is facing farmers?
Yeah, I think ultimately what I'm seeing, I'm trying to put a word to the feeling. Um, Maybe despair, honestly. And that's really, I think, hard to hear. It was really hard for me to hear in all these interviews and conversations that I've been having. But I think that is the perfect word to describe what a lot of row crop farmers are feeling in the state. It's just kind of despair. It's similar to what Dr. Phillips was talking about, where it's like year after year, they're producing the largest crop they ever have, the best crop they ever have, and from in their own anecdotal experience, and they're not seeing any benefits of that. Year after year, they're watching more and more of their friends end up going out of business, not being able to get a farm loan, like the farmer that I kind of profiled for my big story in October, Shannon Hall. 10th generation farmer who is the last of his line, right? And I think what I tried to really emphasize in that story is that behind all of this data and all of these facts is ultimately human stories of people who have been doing this their entire lives, who no longer can't because they just do not have a system that it exists to support them anymore. And I think, when we're looking at our food system overall and how integral agriculture is to society, society's formed because of agriculture in a way, or I guess our modern societies did, right? When we moved from hunter gathering. And yet, so many people now are completely detached from the food system. And that's why I really enjoyed, interviewing Dr. Phillips for my story, is because he kind of provided me this historical and cultural angle of how detached we've become from the food system. And so then, you ask yourself, well, producers are going out of business under the current system. They are too stressed out. We have an aging farm population. They are getting knocked out of this business, the only business they want to be in. Consumers increasingly have doubts about our food system. You see that with the rise of movements like Make America Healthy Again and many, many others of people saying, well, all the way from people going to the grocery store and saying prices are too high for basic goods, all the way to, Make America Healthy Again saying, why are we consuming so many processed foods? So I think we do kind of have a perfect storm in that this whole agricultural system seems to be under immense economic strain, but there is also a great amount of political interest in potentially coming up with a solution. But then you see, of course, immense gridlock in Washington, D.C. And again, it's not one party or other, it's both parties, and the seemingly lack of creative thinking about how to put together a new safety net for farmers that can encourage that diversification, that can really support producers and consumers at the same time. Um, and the last thing I'll mention, and I don't even know if I'm really getting to your question, Ben,
Yeah, go ahead.
but More Perfect Union did a really good video in Arkansas, maybe a month or two after my story. And what they got to that I didn't really is that there's been a ton of corporate consolidation, right? Farmers are increasingly getting less and less money for the crop they're producing, right? Like so much of it is getting skimmed off the top by integrators. Um, so we're definitely the sector is in a lot of trouble, and there's not a clear path forward, but it's at least inspiring in a way to see so many farmers thinking about what that path forward could look like, and see so many farmers stepping up to try and lead and say like we and demand a better system that works better for them and their communities. So
Yeah, that's great. You talk about the
Yeah.
need for, oh, go ahead, Doctor.
Sorry to interrupt you. Talking about the payments, I just put in the chat the results from the ag economy barometer that we measure the level of the sentiment of the farmers every month. And there is a information that's interest related to that. We asked in January to the farmers. We interview every month around 400 farmers across the country. We ask payments for this program are scheduled. What will be the main use of this payment on your farm? And 54% answered that will be paid down debt. 25% for improved or working capital, just 11% invest in machinery, and around 9% to cover family living expenses. But we can see more than 50% of this payment would go just to pay down debt. So we can have this number just to have a better idea about the financial stress that farmers are facing currently in the US. But you can check more information in the link. Thank you.
Yeah.
I would add to that, like it's probably important for people to realize that not every farmer got access to this bailout payment, and not every farmer gets access to a similar level of USDA support. Different sectors in the agricultural system get different types of assistance. That's a part of the problem, especially in states like Arkansas, where we have two or three different agricultural economies, and one part of the agricultural economy is able to capitalize on the assistance networks in a bailout system, and the other part is not, right? So like the Delta farmers were able to take advantage, even though it was kind of pennies on the dollar of what they needed, in a way that was different than the livestock production up here in the northern part of the state. And I know people talk a lot about like, whoa, cattle prices are high or whatever. Yeah, that's fine, but it also means nobody can afford to buy cows, and we need to buy cows
Right.
as well.
Yeah.
And so there's multiple layers in this that aren't captured in like this. The survey work that you're doing, Dr. Colosi, is amazing, and it's grabbing this really valuable piece for us. And I just want to remind folks that there's another layer of agricultural practitioners that are being left out to dry.
Yeah. We're in the second half of our panel discussion. I'm going to be getting to some audience questions here in just a moment, but I've got just a couple more of my own. And Phillip, you mentioned the need for kind of creative thinking in Washington. April, I want to ask you about that because I think you probably have some ideas. But real quick, first,
Isn't that kind of an oxymoron,
yeah.
creative thinking in Washington? Just
But
putting that out. So I really hope no politicians
real
are
quick,
here.
while you get ready to answer that question, Monica,
Okay.
I want to come back to you real quick. In your story, we're talking about the investments in Latin America from China and what it means for the American farmer. It didn't just hit farmers. I mean, you wrote about the impact on port workers and other parts along the export chain in the U.S. Can you kind of talk briefly about that impact?
Yes, this was an interesting part of my reporting. I had the opportunity to speak with Jane Seroka, the executive director of the Port of Los Angeles, who told me that agriculture is the port in that specific port, is the single largest export sector. And within that, soybean rank as the number one commodity. Then this give you an idea how important is agriculture and a specific industry into this agriculture industry. That give you, Seroka emphasized that for example, that every 4 containers handled at the port supports one job. And when you export values, when export values fall, the impact is felt directly to dock workers, truck drivers, customer brokers, and warehouse employees. He also pointed out that in South California, for example, roughly 1 in 9 people has a job connected to the port in some way. In other words, what might look like a trade shift on paper translate into a real economic consequences for workers along the supply chains.
Yeah, yeah. I mean, I'm sure many of in our audience maybe are living and farming communities, but for the, where the impact obviously is real, and we've been talking about that. But I mean, if you're in a medium to large city in the Midwest, you're talking about railroad hubs, truck hubs, and if you're on the coast, you're talking about ports. I mean, this is a truly been a national impact. April, there's no shortage of policy experts and researchers offering ideas on how to bring stability to the U.S. ag market. But among farmers, what do they see as the solution? What do your neighbors believe is needed, and what would you tell lawmakers, I mean, including the president, if you were to talk to him about this?
I'm already blacklisted from him, so um, joke. Um, so I asked my farmers this question, and they got caught up on, because I'm a farmer, I go to coffee. So stability, what's stability? Define stability. What are you talking about? And it's so true, because we have weather, we have the markets. By a simple social media post, the promise of a trade deal can go up or down 60 cents. So, we have so many things going on that, but that's what we need in agriculture now, is stability. My family's farm has been in my family 125 years. This is my 41st crop I'll put in for it. So I've been around at this quite a while. And every year, every farmer, we don't want to rely on these payments. And the one that we haven't got yet, that's supposed to be coming sometime, that Trump announced, I said in an interview, it is less than 10% of the inputs I've already paid to plant a crop in April that I won't harvest till October. So it's very minimal. I mean, it's welcome, yes, because they're using our commodities, soybeans, to bargain with China. But yet we don't want to be caught up in that. We just want trade. We just want markets for our crops. But I think the conversation that really needs to happen, that nobody wants to have because they want to get either reelected or whatever, but we seriously need to sit down and look at the crop insurance. Is that going the right way? What if all the trade deals and everything went away tomorrow magically? Where do we go from there? If there wasn't anything there, we can't compete with Brazil. China's making it so they can get their we cannot compete with their price. So how are we going to compete on the world stage with the commodities we grow? And that's really the conversation that needs to happen. What is the true safety net? And how are we going to compete with someone who can raise, crops $2 a bushel less than us, So those are the hard conversations we really need to have and sit down and work these things out. I don't have the answers. I can tell you no farmer loves the government payments. It's just the game we have to play now. And, and it's the game China and the US are playing, with our commodities. So I don't have any answers, but that's what really needs to happen. People much smarter than me, but have farmers at the table to say, this is reality and this is what we have to deal with. And, let's sit down and really get things worked out. How can we compete with the rest of the world?
Yeah, that's so important. Well, we appreciate you being at our table and providing that perspective. So I'm going to ask some questions that we're getting from the audience, and Lauren, Investigate Midwest Assistant Editor, is kind of collecting those in the chat. So if you do have some, go ahead and submit those in the chat. Dr. Calusi, this could be for you, or if anyone else wants to chime in. A question we've got here is, it says U.S. markets can only be boosted so far. What happens when farmers overproduce soybeans? The U.S. market has no more room for growth, and export markets have been strained or terminated.
Yeah, when that happens, the price for sure will go down. We are at the moment right now that we kind of have oversupply in terms. We have seen Brazil increasing its soybean production, also Argentina a little bit, other countries in South America like Paraguay, and this year maybe American farmers will increase the soybean area again because last year they decreased. And we also have seeing China trying to reduce its dependence of the import soybeans. Nowadays, China produces around just only 20 million metric tons, and their consumption is over 100 million metric tons. So they really need to import soybean from outside, but they are also trying to reduce this dependence with incentive to increase the production in China with new GMO varieties. So when you think about this competition, especially looking the Brazilian perspective, sometimes, oh, it's good because Brazil exports over 80% of its production to China, but at the same time, it is a very high dependence. If something happened in China in a couple of years, where Brazil will put the amount of the soybeans that they produce every year. We know that the last decades, China was the main driver for the Brazilian soybean expansion. So, and nowadays they are making money, it's a good situation, but the same time is a very over dependence. There is this discussion in Brazil how to diversify the market. The same discussion that is having here in the US nowadays, start to have in Brazil as well to try to reduce its dependence of China. So we'll see. It's hard to answer because if you go back in the last 5 years, we had two main disruptions that were the pandemic in 2020 that keep the prices very high. After in 2022 with the war in Ukraine and Russia with fertilizers market. But in terms of supply and demand is something that, I mean, is the rule. When you look that, I mean, in this rule, there is no way to change. If you have more supply into the market, the price will necessarily drop.
Yeah.
And also, when
Yeah,
you
no,
talk
please.
about April mentioned about the production cost that is rising since the pandemic year, we never came back at the same level before the pandemic in terms of cost. So, and that's the reason that the margins nowadays are very tiny because we kind of come back for the same level of the prices, but we didn't come back for the same level of production costs. And maybe we will never come back at the same level.
Yeah. This next question is open to anyone who'd like to answer it. The person asked, considering the challenging environment for soy farmers, is diversifying to specialty crops a viable alternative for economic security? What are the main challenges to making that change?
I can answer that quickly. I can grow anything you want me to except in February in Iowa, but it's the markets I have. You know, I have a Cargill plant, a biodiesel plant, crush facility 10 miles from me, a POA plant, you know, ethanol 10 miles from me. My co-op is 2 miles from me. They handle corn and soy. So it's just like it's the what I can get to market economically feasible. I have an organic farmer that lives right. I mean, we share equipment. He cleans it out first, but yeah, no, we share. And if he doesn't get 3 times more than what I am, he's not making money. But he also has to truck it to Albert Lea, which is 90 miles away. So, you know, it's a trade-off. But as far as Midwest farmers, that's where our markets are. There, you can do diversity. It's just, it would be a much smaller niche market, I think.
The whole of the system since the 50s has been built to maximize efficient production of calories per spatial unit.
There you go.
You know, and so it's like we can't. Yeah, it'd be great if, you know, everybody had the sort of agrarian little farmer stead kind of dream. And I, you know, we all probably have fond memories of grandparents' farms and gardens and things like that. But I do lean a little bit that way to solve some of our problems. But until there's fundamental changes in how we think about not just the immediate structure of the whole system, but the long range planning, like getting rid of a 5-year cycle and thinking in terms of almost generational cycles for agricultural systems, then we can diversify all we like, but we're not going to see a meaningful support system either from the market side or from a government subsidy side emerge.
Yeah, thank you. Our next question here says, as trade flows shift and soybean production expands in South America, what are the environmental and land use consequences that often get left out of the trade conversation? And how do those compare to impacts in the U.S. Midwest? I mean, we've been talking a lot about obviously the economic impact, but a question here about what are some of the environmental consequences or challenges if we see this kind of shift to South America?
I can take partially this question. When you think about the conversion of the cropland in Brazil, at least in the last 2 decades, mainly of the conversion happened into degraded pasture land, and that's the land that nowadays are occupied by livestock. And for ranchers, sometimes they are not profitable because they needed to do a lot of investments in lime, in fertilizers. So sometimes they prefer to sell this land or to rent this land to do a conversion into cropland. Of course, there are a lot of information related to deforestation in Brazil. When you think about Amazon, for example, also there is a lot of misinformation. Maybe we will not have enough time to discuss about that. But something that I needed to just clarify, there is a forest code in Brazil, and there is legal reserve in Brazil. Also, all these rules, they are very strong. Of course, there are some cases that farmers, they don't follow the rules, but they are exceptions. They are not the rule. For example, the legal reserve is one amount of the land that must to be preserved. That's from 20% until 80%. In the Amazon region, if you are a farmer there, you can use just 20% of your private land. Nowadays, 25% of the entire property in Brazil, all land in Brazil, is legal reserve, is private land that their farmers must to preserve. But of course, when you think about in the last decades, there was a huge impact in the environment in Brazil, but especially because we are talking about a new agriculture. It's the same that happened here, but here was 100 years ago, and in Brazil is happening right now. I'm not saying that we cannot protect the environment, of course, but I'm just saying that there are rules behind that in Brazil, and the majority of the farmers, they follow the rules in terms of environmental perspective. And also there is a lot of misinformation. Most of the soybeans nowadays, they are produced in the Cerrado region, in the Brazilian savanna, not in the Amazon, just a portion of that.
I would like to add something that we talk about Brazilian soybean. We have to consider that this is not only Brazilian soybean. We have well, we know, I'm not Brazilian. Brazil have the presence of two main ag companies that export from Brazil to China. There is Cargill and ADM. Then, if we talk about this, it's not only the Brazilian farmers. The American companies have present in Brazil and export, buy the soybean from farmers and export this soybean. That is something that we have to consider if we talk about the impact, possible environmental impact. It will not only Brazil, there is American business there too.
Yeah, such a great point. You're right. I mean, there's sometimes a lot of attention on Brazil and its role in the global, climate, but these American companies have a presence there and should have great accountability as well. So we have about 10 minutes left in the panel. And what I want to do as we wrap up here is I want to go around the room and ask everyone, kind of what you are watching for in this year in 2026 related to this topic. But I want to start, April, with you and ask you a kind of a more direct question. And,
Okay.
and that question is, I mean, so how are farmers going into 2026 after a difficult 2025? I mean, what do you expect to see? I mean, less acreage in soy,
Crying, weeping.
yeah, yeah.
Yeah, no,
I mean, what do you think for you from the farmer perspective?
right,
What is this year, and what are you going to be looking for in the months to come?
right. So a lot of tightening of the belts. And, like I always say, when the rural economy isn't doing, when the farmers aren't doing good, rural economies aren't doing good. So it hits everybody around here. Nobody I know is trading equipment or, buying anything. That's, and John Deere's right here. So, that's a big impact. My fertilizer and chemical guy said, well, none of this is affecting my farmers. And I looked at him and I said, I'm 65 and I'm pretty sure I'm the youngest farmer you deal with. And he looked and laughed and he said, you're right. I said, their land's paid for or they're renting it out. Let's get real about this. I said, there are farmers struggling. And then I talked to my banker, and yeah, a lot of them my age are just saying, forget it, have a farm sale, and they'll rent the ground out. So, but you know what? We've been here before. This too shall pass. Farming has its cycles, the ups and downs. The problem this time is those imports aren't coming down, and we're just not seeing that. So, that's what we're looking at. And the markets aren't acting like they normally do. So, it's hard to plan when, like I said, a social media tweet or something can change the market 60 cents or a policy or so we're just tightening our belts looking forward from what Dr. Calusi told me in September. It's going to be not as good in 2026. And what I've heard from everyone, it's just, it's more of the same. So buckle down, let's get through it and, look forward to better times.
Yeah.
But farmer, we're used to that. So, if we've been through it before, you just cut back and get through it and, sell at a profit if you can, lock in those profits. So,
Yeah. Well, do you think, and I just, before we go back around the room, I mean,
sure.
I think one of the challenges, at least as a journalist, is that farming has long been a challenging profession. I mean, there's always been bad weather, there's always been market disruptions. And I think for
Right.
some in the public, do you feel like that kind of helps people, or that causes people to kind of overlook the current challenges? Like, well, it's just cyclical, it's what happens, it goes up and down, farmers are always struggling. Or do you feel like this is kind of a unique moment in a way, or just
I,
continue that
I
cycle?
think it is so I came home in 1985 and started farming. Anybody remember the 80s for farmers?
Yeah.
I bet you teach it in your history class, Jared.
Yes, ma'am.
So it it was not pretty, but we had 16% interest rates now. Our interest isn't the same. I'm older, so I have a lot of my debt paid down. I sell some land debt, but it is for these younger farmers who have never experienced something like this. And they're going through it, and so this is like what they've said to me. This is my 80s, April, and I can see that. But I said I got through it. I got through it just coming home to the farm. You'll get through it. You just you can't buy that brand new truck every year. You can't. There are just things you do. And to add to this, and what was said before, the farther people get away, I think Phillip said it, the farther people get away from where their food is produced, the more critical they are of us, the more they want to tell us what to do. And they don't understand our realities and what we're dealt with here on the farm. So I don't know. I wish I had all the answers. I'd be sitting on a beach with a nice drink in my hand and,
Well, we appreciate the perspective. Thank you, April.
Sure.
Philip, I want to go to you. What in this year are you going to be looking at as you continue your coverage?
You know, when I was writing that article last year, one fact kind of stuck in my mind as I went through the USDA data on the last ag census in 2022, and that's that 2,000 farms in Arkansas produce 90% of our grain output, our commodity soybean,
Oh,
rice,
I believe
corn,
that.
cotton output. Only 2,000. We have lost 10,000 farms since around the year 2000, which is when I was born. And the point that I'm making is, I interviewed some farmers who said kind of something similar to April said, and I'm not criticizing when I say this, which is that we've been through the good and we've been through the bad, and some people are gonna, they're gonna go out of business, but hopefully we'll just make it through. But the point I want to make here at the very end here is like, how many farmers are we going to lose under that kind of mentality of it's just good and it's bad some years? How many farmers are we going to lose? How far is the industry going to consolidate to the point before we say we need a major policy change? I'm not saying we have to go back. Because I, just like April, just like anyone here, I don't have the right answers. But how many more people have to get pushed out of business? How much more consolidation has to happen before our legislators at the state and the federal level, mostly at the federal level, say to themselves, this can't go on? 2,000 farmers producing 90% of our grain output, that's an unsustainable system. If those 2,000 farmers who are likely over the age of retirement, most of them, at least half of them in Arkansas, according to the data, sure, maybe a lot of them have a plan for who's coming up after them, their son, their daughter, cousin, whoever. Um, but I think no one on this call, no one could seriously think that this is a sustainable and a good system that is working for the producers and the people that produce our food. So something's got to give. I really do believe that what we have entered is truly a reckoning. It's truly an inflection point with what we've seen since the 70s and the 80s, with more and more farmers going out of business, more and more consolidation happening. I really do believe we're getting very close to a real political and economic reckoning here, where it's like, sure, we can argue about where the markets are going to be next year or the next season, or where we can open these markets up for soybeans or rice or what have you. But soon there's not going to be any farmers left to fill those markets. You're just going to have 10 farmers in the whole of the Arkansas Delta farming 6 million acres, right? Is what we're quickly going towards. So when do we put the brakes on that and say we need a new system to get more people involved in farming and to support a very diverse array of farm operations? So that's all I'll say at the very end.
Yeah, thank you, Phillip. Dr. Colucci, what will you be looking at this next year?
So just about that, something that when you compare, I know that you have just 1 or 2 minutes about this consolidation process, the number of the farmers that is decreasing. One big difference also that we see between Brazil and United States is the average of the age of the farmers when you think about the future of the agriculture. So we are, like April mentioned, that we are in the point right now, maybe the new generation, they don't have so many incentives to continue on the farm. And something that you should think about when you think about Brazil, the average of the farmers is lower than here, is 47 years old. Here is 59, 60 years old. So something just to keep in mind when I think about the future of agriculture. The decision makers that are on the field nowadays, maybe they will not be the same in 10 or 20 years in the US. But in terms of trade policy, so I don't know what we could expect for 2026, but I would say that the trade policy is still central. I would say keeping a strong commercial relationship with the key buyers, especially China and other markets in Southeast Asia. It's a very important. Also, diversification that could help the US offset the drop in exports, at least related to China. And I would say investments in infrastructure in the West. The US has long been a global leader in infrastructure, 1,000 miles ahead Brazil, but in recent years we have seen some stagnation in investment, mainly in storage and capacity and port facilities in the US. Maybe some point that American government should pay more attention. I know that you are almost over time.
No, it's great. Thank you. Thank you. Monica, for you, as you continue your reporting, what do you feel like you're going to be tracking and looking for this year?
I will have my eyes into issues. One is how this trade situation is hurting the wallet of the farmers. I'm going to give you an example. In the fall, I had the opportunity to chat with one of the vendors of the at the Des Moines downtown market. He was a guy in his 30s, first generation farmer. He has kids, and at that moment in the fall, um, his wife was expecting a new baby. He has a second and third job to support his farm. And also, his wife has a business of natural beauty products to support the farm. And when I was chatting with him, the conversation started so emotional for him because he really was struggling to support his farm. Then I'm a data reporter, then I'm going to give faces to the numbers, financial numbers that are there. For example, one of the these financial numbers that I have on the head of my head is the debt. How is people even struggling to pay their debt? And the other issue is aging. I'm working on a story of how aging is affecting the farmer industry in the US when also there is a anti-immigration policy in this country. And we know that immigrants have an important role on agriculture. Then this is like the focus of my reporting, how it will be.
Yeah. Thanks, Monica. And finally, Dr. Phillips, what will you be watching for the rest of this year?
Well, I'm a historian part of my life, and so I usually look backwards. But I am also a farmer, and I live in a rural community. And so, like April was talking about, when the ag economy is not doing well, the rural countryside is not doing well. So, what the things I kind of always are keeping an eye on are as farm consolidation is happening, that in some for some folks is a logical and kind of like just thing to occur, but that has very real negative consequences for the countryside, not just for farmers, but also for how we think about who gets to have access to the land and who gets to manage the land. And at least in Arkansas and Oklahoma and the Ozarks and kind of where I'm at, that's causing some real kind of class issues. And so what we're seeing is that rural residents who've always been pretty scrappy make do and can figure out how to make it work through the ups and downs of the agricultural world. As fewer and fewer of them are there to anchor the community, there's more and more pressure on them to sell but to sell to out-of-state investors. And so we're seeing a rise in absentee land ownership that's not in turn leasing it out for continued agricultural production, but that is turning into something entirely different. So I'm going to be watching for as we see this changeover in population and this changeover in what consolidation means, what this changeover then is going to be for the rural countryside as a whole is going to be. And the historian in me tells me to be pessimistic.
Yeah. Um, well, maybe we could have ended on a brighter note, but a real note nonetheless, Dr. Phillips. But this is an important and serious topic, and obviously the challenges facing the agricultural industry and our food system. I mean, we are, at an inflection point, an industry that has gone through, a long history of challenges, but we are in the midst of a big one nonetheless. So we'll definitely appreciate that perspective. Well, that is going to bring our panel to a close. I want to thank our panelists for this great conversation, great insight and perspective. Thank you guys so much for taking the time. I also want to thank again Lauren Cross for organizing this discussion. I also want to thank those of you who took the time to watch and participate. I'd encourage you to continue reading and supporting the great journalism around this topic at Investigate Midwest, the Mississippi River Basin Ag and Water Desk, and the Arkansas Times. Each of these outlets has great and informative newsletters that I would also encourage you to sign up for if you haven't already. I think those links are in the chat right now if you'd like to take a look at those. It won't surprise you to hear that your support is needed now more than ever. So thank you. Thank you for your support. Thank you for your attendance, and everyone have a great rest of your day.